Hi, welcome to the Market Alert for Thursday, the 20th of April 2023. So regional banks rip higher as inflation spooks bonds, Bitcoin and bullion. So we saw the metals markets being a bit hammered yesterday. This is behind it. UK inflation eases but still remains above 10% as cost of essential foods to record highs, some 20% in year to year for the food sector. And US stocks finished flat with price action choppy amid earnings updates and after early headwinds of hot CPI data from the UK, which we've just seen there. And hot CPI ignites global hawkish repricing, equity volume tumbles, according to News Cork US market wrap there. Economic news for today. What have we got? We've got unemployment claims from the UK, and then we're off to the US. Let me just redo this. That's more like it. It's actually not UK. It's actually the US. I'm going to say we had the unemployment claims the other day, so it seemed slightly odd. And a quick refresh there. 1:30 p.m. unemployment claims, weekly ones. Then we've got Philly Fed manufacturing. That was also a clue there that it's the wrong time. So 1:30 p.m. for this too. And then existing home sales will be an interesting one, actually. That's moved the markets the last few times that's been released. Yellen is going to be speaking. Well, that's a joy, isn't it? The woman who can't string two words together and has no idea what a budget is, never mind a budget deficit. And FOMC member Waller is speaking at 5 p.m, so let's see if he's got anything hawkish to comment about as well. But as it says, the market's choppy. It's fairly quiet as well at the moment. So let's have a whistle-stop tour through the markets, kick off with the Dow, and have a look and see what happened during yesterday's trading session. So in the Dow, Monday the market was down. Monday was up, Tuesday down, Wednesday down, and overnight we're still below the 5-bar moving average for this market at the moment. We're at the 89% retracement. We've seen the implied volatility move to a low that is also conducive to a market making a potential correction as well. The weakness is certainly dominating at the moment, and then throw into the mix the fact of selling may go away, which has been a pretty good indicator over the years. Of course, it doesn't pan out every time, but certainly it's worth keeping in mind as a lot of people decide to go off for their spring break. So the Dow showing weakness there, lower highs over the last yesterday and certainly overnight as well. Subtle, but still worth noting there. So yesterday the Dow were moving lower, as can be seen here. Once we broke the 200 MA, the market trading down towards Tuesday's low. The market then recovering, and then we had the kickoff of the Dow at 2:30, which is this big bar here. This is the pre-market session that you're looking at over to the left. And then the market managing to rally up to Tuesday's close there. However, this didn't hold, and before the end of the session we were back down. But note, this is only a 150 point range when we've had 600-700 point ranges over the last few weeks, particularly with the SVB issue that we saw a month ago. So the market's struggling against a headwind to make any progress on the upside at the moment. The important thing is to try and stay above the DP, which the market is failing to do so at the moment. So the daily pivot, for those of you who are not aware, it's the market's bullish if it's trading above it, and bearish if trading below it. And if it's trading below it, then you want to watch the close if that was lower on the previous day. But most importantly, look at the low, because this is where the market's likely to find a bit of a bounce, because if you look back to the left of yesterday, you'll see that's where the market turned around and moved back to the upside. In the German DAX, looking a bit more positive than the Dow there. You can see we've still got rising lows and closing above the 5-bar moving average. So in a short-term momentum, we can see there that price is still moving to the upside, and also taking out the previous day's high, again, which is a sign of bullishness. However, don't be fooled by this, because if the US markets start to move down sharply, the German DAX will eventually play catch-up. Yesterday we saw the market retrace over 100% at the low, and then once this had happened, we saw the market moving nicely all the way through. But again, small ranges. It looks like we're getting a lot going on here, but not at all. So if we just go from here up to the high there, you'll see we're just 95 points. So that quietness and the sideways move are starting to kick in ahead of the May theory and mantra. So we're just at the DP. The market will need to hold in all time frames at this level, but in the 30-minute chart it's just broken the 200 MA and the 20 bar moving average as well. Watch this level here. The market could pick up a bit of buying, because this is what happened overnight. Their failure to do that will then note the BRN, the low to the left, and then we get into the 200 MA, the S1 and the low. So we could have a quick blast to the downside, but at this level then they can quite easily turn the market around to this area. Significant area there, but failure to hold and taking out the low will see the market move to the downside there. In the 5-minute charts, let's just have a quick look. Again, you can see that the market's trading at the DP and just through the close. They're trying to make its way back at the moment. Yesterday, as I say, choppy. Last night it moved down nicely, but yesterday morning it was very, very choppy, as can be seen here. The first hour or two, very choppy, before the market established that it was free to move to the upside. And there you see this happening mid-morning. But overnight, at the moment, trying to hold at the DP for the German DAX there. In the S&P, red bar for yesterday, closing below the 5-bar moving average, also down on the overnight, not too dissimilar to the price action we've seen in the Dow. Yesterday in the electronic session, the market moving down, and then we moved back to the upside to the DP and the previous day's close, but the market not holding on the overnight at this level, and also attempting to try and move higher off the DP, but failing to do so. And now the market is below all of the averages and the DP and the previous day's close. So watch the low if there is a move to the downside when the German market kicks off at 7 a.m. and particularly 8 a.m. when the cash market opens. In the UK, FTSE 100 down yesterday with the inflation numbers, still struggling with the 89% retracement there. It's the first red bar we've seen in this market for some days. So being fairly strongish, but the 89 certainly holding the market back at the moment. 30-minute charts, we saw it moving sharply lower after the release of the CPI numbers, and then moving back to the DP, which formed a resistance. This has sent the market down. Where did it go to? Went to the previous day's low. What happened? They brought back into the market, as denoted by the green bars, and now back above the DP and the 200 MA. And the market needs to stay above this if we're to make any progress to the upside to yesterday's high. Failure to do this and a close below the DP and the 200 MA, which are very good support areas, we'll see the market find a bit of support at the close, and failure to hold this, we'll see a retest of the low. In the currencies, GBP JPY up yesterday, breaking through that resistance that we've seen for the last few days. As I spoke of yesterday, we had that sort of triangle formation that the market managed to get through. Bit of weakness overnight and profit taking, no surprise there. In the 30-minute chart, this was done and dusted by taking out the high during the first part of the trading session yesterday, trading up to the R3. Those of you who followed the market alert for a long time know that the R3, 90% plus of the time, the market will stop in this area and then either show profit taking or consolidate before moving higher. In this case, we saw the profit taking coming back to the high. Once the high is taken out, it then becomes a support level. Not only that, we've got the 50-bar moving average in this area as well. And also, if you look there, you can see we've got a big round number, a BRN, and we've got volume demand buying back in at this level as well, which then saw the GBP JPY moving off this level. And then from this high down to this low, we see the market stopping at the 78% level there, where the market has since found resistance. And also if you look from there back to there, now that will be an 89% retracement, and from there back to there will be an 89 on the downside. Currently the market struggling with the close of yesterday, and also the 200 MA, the 50 EMA has become support, and at this level we also have the DP. So if you trade the GBP JPY, watch this level for support. Meanwhile, in the pound, yesterday you see a bit of selling, as obviously there is talk and rumour of interest rates going to 5% now in the UK. Market holding in the daily chart at the 20 bar moving average, and back again closing above the 5 bar moving average there. The detail of yesterday in the 30-minute chart coming off the DP, trying to keep the market bullish, market trading up to the R1. Then making its way back down to the 124 level, which is this line here, the red line there. So 124 psychological level was important. They brought the market all the way back up, driving through with the green bars there, all the way back up to this level. And then the market just running out of steam as the dollar came on board and moved slightly higher during yesterday. And speaking of the dollar, you can see yesterday this moving up to the upside. It's staying above that 101 level, which is really important at the moment for this market. It'll need to close below this if the pound is to move higher, and also the metals. Speaking of which, let's have a look at those now. So starting off with silver, we managed to drag ourselves back up yesterday above the 25, however overnight a bit more weakness. Notice also that we're making lower highs here at the moment, or they're struggling with the previous day's high, as that can be seen in the 30-minute chart. Yesterday morning they moved the market down on the UK CPI numbers. We did find some buying, and the market managed to rally all the way back up to Tuesday's high. There we had a double top eventually by the end of the trading session. The market sideways overnight, and also as soon as we got to the high there, the market then forcing more selling into the market, as can be seen here. And then we've got the market trying to get back above the DP on the overnight. Same in gold. You can see there, very big bar yesterday for the gold market, a lot of volatility, and that can be seen here with sell-off driving the price back below $2,000 an ounce. That was the objective, get it back down. Central banks still buying more gold than they've ever bought since 2010, and this way if you sell in the paper market heavily, you can move the and drive down the spot price. Pure manipulation in order to do this. And if we look where we are overnight, also the DP with gold prices finding support at this level at the moment. So finally, gold-silver ratio, we see this is up on the overnight. We're down yesterday, but I would expect this to possibly move back to the upside a bit. It's been a good run on the downside for this, which has been good for the silver price, showing more of a percentage move than gold. But like I say, they're not finished yet. If they can force the market lower to get out of the massive short positions that they've had. And I watched a video the other day talking about this with Bank of America, Citibank, etc. The four major US banks who are still heavily short but are liquidating those short positions. Also some interesting stuff coming out with the LBMA, talking of shortages of silver, and also the COMEX taking delivery from London because of shortages of the precious metal. But of course, whilst you've still got the paper market to move prices lower, then they will do that, particularly if they want to get out of their short positions. But once they become net long, then that will be a different ball game, and I suspect that is coming in the not too distant future. It's gone quiet on the regional banks in the US, as we saw they ripped higher yesterday according to the news headlines. So all very quiet on the Western front at the moment, and that's when you should be concerned and worried, when the markets become very quiet, because eventually something comes along that then kicks off the volatility once more. Okay, that will do it for this one. Let's see what happens during today. And with that, as ever, thanks for watching. See you in the next one.